Morning, Steve Reed in Chicago with the morning grain comments. Well, it's Friday. Hope everybody has a good weekend. There was a flurry of stories overnight out of China that their stock market has collapsed because of a big collapse in commodity prices. As we've been following, China has been trying to crack down on speculative trading in commodities, and so these prices have set back considerably from their highs, and that's beginning to affect the Chinese stock market. We also saw where a couple of the Fed governors said that they're going to leave the door open to possibly increase interest rates at the June meeting. I think that had a lot to do with the rally in the dollar yesterday and some sell-off into commodity prices. Overnight, we've got the dollar lower, you've got the crude lower, metals are a little bit higher, but we're watching to see the Chinese market see impact that may have on prices. We also saw that one of the Brazil companies cut the second corn crop down in Brazil 10%. This is due to the dryness. Argentina said that their soybean harvest is 40% done versus 60 normal. Yields are still coming in a little bit better than last year, but the question in Argentina is just how much acres were lost due to the flooding. We also see more and more reports about the dryness in Alberta, the fires there, and it could impact crop yields there. Yesterday, the annual Kansas crop tour surprised everybody by estimating the crop at 382 million bushels. The average guess was around 320. USDA last year said the crop was 322 and the 5-year average is 305. And there's some people that were on the tour that said the crop could get over 400 million bushels. So big yields offsetting the fact that there's lower acres. We're only 2 trading days away from the USDA May 10th report. Again, I think it should be a negative report. Next year they should show an increase in corn and wheat stocks, and I don't think they're going to drop the Brazilian crops or the Argentina crops as much as we're trading, and that means they won't put next year's U.S. soybean carryout as low as we're trading. It is interesting, there was one report out that said that historically warm U.S. Midwest winters tends to be warm summers. Kind of goes along with some of the forecasts that we're going to flip-flop pretty soon and go to a warmer and drier summer pattern. Funds yesterday, big sellers of beans. They also sold corn, wheat, meal, and oil. Continue to kind of take back some of their longs in the beans, meal, oil, and corn and add to their short position in wheat. 6 to 10 day suggests normal to below temps and normal rains across much of the Midwest. So again, we're searching for value that going into the report, and assuming we have normal May weather, we should trade back below $10 beans. And assuming that China does start offering some of their reserve stocks, that should weigh on prices, especially corn, to a little bit lower values as we get ready for the summer weather. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.